In the metals quadrant, gold was a very interesting story today, up over 1% in a potential breakout. The last time I talked about gold, I talked about how the price was compressing and volatility was consolidating in what looked like it could be a breakout, and that particular breakout, being a symmetrical triangle after an up move, would likely lead to an upside breakout. Now that may have happened today after the move we've gotten, this 1% move, took us over that trend line that forms the symmetrical triangle, that upper trend line. It is not an official breakout as of yet. It really needs to get above the defining point of that triangle to be a confirmed breakout, but technically that's what will extend the move. This particular one could be a head fake that just adjusts the angle of that trend line, so we'll see how that plays out. Comments from Ray Dalio, who is the Chief Financial Officer, Chief Investment Officer, and founder of the world's largest hedge fund, Bridgewater Capital, talked about a paradigm shift that could make gold a more attractive asset over the short to medium term, possibly even the long term, depending on how the central bank dynamic plays out. He gave that as his reason. The central banks getting involved with more dovish policies to try and halt slowdowns in global economies, halt downturns in global economies, could make something like gold more attractive, as well as saying that people were underinvested in these kinds of assets. He said that he's going to come out more about this, but that was really where about 3/4 of today's gold move came from. His comments came out at about 10 o'clock this morning Central Time, 11 o'clock Eastern Time, and that's where we got the majority of this move. Gold was up about 25 basis points when his comments came out, finishing up near 1%. So those comments definitely a direct effect on gold. And then the gold-silver ratio needs to be watched. Silver over the last 4 days, up 6.5%, taking that gold-silver ratio down below 90. Now remember, that 90 actually got up close to 92 in the gold-silver ratio. That's about a 25-year high on that ratio. So most people are thinking that gold is actually going to fall to tighten that ratio up. So it could have had a lot to do with why gold rallied the way it did today if some of those people shorting gold on behalf of the gold-silver ratio actually covered and bought gold again. That could have been part of the reason. There's no way to confirm that, but it could have been part of the reason that that particular gold move that we got today was a little bit stronger. That gold-silver ratio hitting about 89 today. It's the first time below 90 in about a week and a half. Again, 92, which we got to late last week, is about a 25-year high. The normal gold-silver ratio is between about 50 and 60 ounces of silver to buy an ounce of gold. So we are at lofty levels, so you would expect that to tighten a little bit. So if gold continues to rally, you could get a little bit napper, even though again 6.5% in 4 days, including 2% today, is a pretty big move for silver. But again, that gold move pushed mostly by hedge fund manager Ray Dalio's comments earlier in the day.